Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, HDFC Group is in focus because there is the updated shareholding pattern that has come up. To discuss what the implications could be, also because of the merger that we have been talking about, we have with us Sriram Velayudhan, who is the Vice President at IIFL Securities, and Nimesha will also be joining us to take this discussion forward. Sriram, good afternoon. Thank you so much for joining us. Well, that's really the first question. You have written a note on the updated shareholding pattern as well. Tell us what the implications could be in terms of flows and what does it mean for the stocks as well?
Hi, good afternoon. So the very important development, both HDFC Limited and HDFC Bank have reported the shareholding for the December quarter. So this assumes importance because in the run-up to the closure of this event, we will have to monitor the foreign room. So in terms of an MSCI implication, the methodology states that, so first and foremost, on a merged basis, when we consolidate the shareholding of both HDFC Limited and HDFC Bank, the foreign room stands at around 17.25%, which is above the threshold of 15% for inclusion of HDFC Bank in the MSCI India Index with an adjustment factor of 1. So this assumes a lot of importance because if HDFC Bank is retained with is included with an adjustment factor of 1, the stock is likely to see potential inflows of around about 2.5 to 2.8 billion before the closure of this event. Because HDFC Limited currently has a weight of roughly 6%, and HDFC Bank will attract a weight of roughly 10.5 to 11% in the MSCI India Standard Index. So for the incremental part, the passive funds will have to act on that incremental part, which HDFC Bank will come out in the MSCI India Index.
Got it. Hi, Sriram. This is Nimesha. I understood, you're talking about 2.8 to almost $3 billion of inflows in HDFC Bank. Tell me, whether it will be at a one go or it will be on a staggered manner. So, any sense on whether it will be at one go, the entire 2.8 billion has to be put in HDFC Bank post the merger?
Hey, hi, Nimesh. Good afternoon. So this will happen at one go.
Okay.
So as we have seen with the merger events that takes place in MSCI.
Okay.
Indices.
Got it. Sriram, I understood the MSCI angle. I also wanted to understand from you what happens to the domestic shareholding, because post the merger, most of the mutual funds will own more than 10% stake, and no scheme or fund can own more than 10%. So in that case, will the domestic mutual funds will have to sell, or you expect some sort of leeway once the merger is done as far as the domestic holding is concerned in HDFC Bank?
So Nimish, I also checked the domestic holding couple of days back because your mutual fund data gets released by December end. So on an average, if you evaluate across all the equity schemes, the weight is reasonably equal at this point of time. So I don't see any impact. So it ranges between 7 to 9%. So I don't see any impact coming from that leg.
Got it. Fair enough. So that's the HDFC and HDFC Bank. I guess from an MSCI point of view, Sriram, the next big trigger would be the Feb review and some expectations on what can get added to the MSCI standard index. Any work that you all have done and expectations that the few stocks can get added to the MSCI standard index in the Feb review?
Yes, Nimish. So, based on the assessment that we have done, we are expecting inclusion of Bank of Baroda and CG Power in the standard index in the Feb review.
Any exclusions expected, Sriram?
Yes, on the exclusion, the high potential exclusion would be Biocon and Oro Pharma.
Okay.
So both these stocks are currently below the threshold required for a float market cap. So I'm expecting an exclusion.
Okay. And what could be the potential inflow and outflow in the Feb review as and when these changes do come into play?
So Bank of Baroda, roughly, it's a very liquid name. We are anticipating in both the names, Bank of Baroda and CG Power, roughly the inflows should be to the tune of $130 to $150 million.
Okay.
And Biocon and Oro Pharma, the outflows range between $80 to $85 million if an exclusion pans out.
Okay, well, both those stocks have been underperformers, Biocon as well as Aurobindo. But Sriram, just a quick question with regards to HDFC AMC, and what is the likelihood of an MSCI inclusion in that stock?
Yes, AMC is there on the radar, but I think it still needs some regulatory developments that are happening, because one of the strategic holders is...
Sriram, we've lost you.
Yeah.
It's a bit of a scratchy line, but go ahead.
Yeah. Is it audible now?
Yes. Go ahead.
Yeah. So it depends on the treatment with the index provider decides with the holding that gets disposed of. If let's say the strategic holder who is about to dispose of his stake, if that gets counted as a part of float, that certainly increases the possibility of stocks inclusion, HDFC AMC's inclusion in the subsequent reviews. But based on my assessment, it's still far off from the cutoff levels.
Oh, got it, Sriram. Got it. So, Sriram, you mean there is still no clarity on HDFC AMC getting added to the MSCI in the near future? That's what you mean by that?
Yes. Right.
Got it.
Because first and foremost, we will have to check how the holding gets treated by the index provider.
All right, Sriram.
All right, Sriram. Thank you so much for joining in and giving us all those details on a whole host of things, HDFC Twins being the most important out there. But Nimesh, Kotak, what happened?